and welcome to this Fintech Abu Dhabi conversation. My name's Dan Murphy and I'm from CNBC. And joining me today is Edward Knight, the Vice Chairman of NASDAQ. Edward, welcome into the conversation and great to have you this year.
Dan, it's terrific to be here. Hope you're well.
Let's start on getting your take on the outcome of the US election, because this is a pivotal time in the United States. How do you rate President Trump's management of the financial markets, and what can we expect to change under President-elect Joe Biden?
Well, you can read the financial markets for themselves. We've had a great performance on, for instance, NASDAQ for the last few years. I think the Biden team is a very strong team with a lot of experience, particularly in economic, financial matters, and I expect them to hit the ground running. The results of the election, I think, are fairly clear, and that is good for the markets to resolve uncertainty. And so generally, I feel very optimistic about 2021.
So you think the Biden plan is good for stocks, good for the US economy?
I think President-elect Biden, by virtue of his experience, by virtue of his work in the state of Delaware as a United States Senator, the state of Delaware being the home of most public companies in America, he comes to the job with a clear understanding of where jobs come from in the US economy. And I expect he'll attempt to forge a partnership with the private sector to build the US economy. But job number one for him is managing the pandemic. We cannot have a strong economy with an unhealthy American people. So once we can restore their health and deal with the pandemic, I think you'll start to see the economy fully recover.
You know, it's fascinating, though. I speak to a lot of investors, I speak to business leaders, and while they say, okay, look, the Biden plan means we're going to see an increase in corporate taxes, they are concerned that this could perhaps undermine the trajectory of the US economic recovery. Isn't that a worry for you and the NASDAQ listed stocks that you work so hard to represent?
From what I hear from the Biden team, what they are focused on first is, as I said, managing the pandemic, hopefully getting to the place where we have a widely available vaccine. With that foundation, the US economy will recover. I expect them to turn then to the infrastructure issue and helping to rebuild our infrastructure. So I think those two steps will launch the economy on continued growth.
And Ed, I wanted to lean into your experience here. I mean, you're over in the United States, you speak with business leaders as well. How are you reading the pace of US economic recovery right now? What's it looking like from your perspective, particularly given the surging coronavirus cases that we see in the United States now, record numbers coming out of key states? Clearly, this is a concern that could also undermine the trajectory of the recovery here. How are you reading it?
Well, of course, small business is particularly affected. Certain industries like tourism and hospitality, they're going to have support in order for the economy to fully recover. Again, I expect the Biden administration to focus on providing that support to small business and to the distressed industries that were particularly affected by the pandemic. But as you know, the technology sector has done very well in this situation. We have had 284 IPOs on NASDAQ this year. It's been a record year for us. So there are segments of the economy that have continued to grow. We continue to see the entrepreneurial spirit in the United States and innovation coming out of our entrepreneurs. So that is a hopeful, optimistic note.
And I will move the conversation on from politics in just a moment, but I wanted to ask you about another major issue as well. Of course, technology is key for the future of the US economy, but what we've seen under the Trump administration is a continued push towards China attempting to address issues like trade and technology. Some have even called it a trade and technology war. How do you think the new administration can deal with this major issue between the United States and China? And what does it look like from the NASDAQ perspective as you have conversations with the business leaders and conversations with some of these companies about how they're viewing the future of this relationship?
Well, I think what's notable is the global consensus around the need for China to change its practices around issues like intellectual property. And I expect the Biden administration to continue the work with China to get them to focus on this, but that they will do it on a more of a multilateral basis, a more strategic basis, working with our allies. But the business sector is very unified, I think, in the United States in understanding that we cannot accept this continued practices of China, particularly in the area of intellectual property.
What do you think of this competition between the Chinese and the US tech ecosystems? Is it fair to call it a competition at this point?
Well, I think in some aspects as to who will be a leader in the area of artificial intelligence, that is an area that is going to develop, in my view, only in partnership with government. The Chinese government has begun investing heavily and working with their private sector to develop the new technologies based upon artificial intelligence. Europe is looking at that. I think the US already is leading, but it needs more, I believe, of a strategic approach involving the government, because the private sector alone cannot take on the entire Chinese government and private sector, which is very focused on this. So it is a competition. I think the society as a whole will benefit from the innovation that will come from it. But if the US is going to continue to be a growing economy, an innovative economy, it has to master that new technology.
So what are the weaknesses on the US side, in your opinion, then? And where is the opportunity to grow in this competition as you describe it?
Well, it's a cliche, but I think it's true that artificial intelligence will change the economy in much the same way that electricity did in the 20th century. So it's applying it to a wide range of products. At NASDAQ, we are applying it to areas like anti-money laundering and investigations where you have huge amounts of data that come into financial institutions, and marshaling that data to see where there are truly suspicious transactions going on is a way to bring safer markets to the public, to protect the public, and to protect our financial institutions. We see it in other forms of surveillance of the market. So we're highly involved in NASDAQ in technology around the integrity of the markets globally, selling it in over 50 countries, over 100 stock exchanges. So we're excited about that, but that's one area where I think you're going to see a wide application of artificial intelligence to master the huge amounts of data that are generated by the markets.
It just seems like there's so many opportunities out there right now, and the future is really, really exciting, particularly when you look at what's happening in the United States from our perspective out here in the Middle East as well, Ed. But to focus on another topic here, I wanted to ask you about the IPO pipeline and what this looks like moving forward for NASDAQ. You saw 40 IPOs alone in September, and you mentioned that you've seen around 250 IPOs alone this year. What does the fourth quarter and let's say 2021 and beyond look like from an IPO perspective at your end?
Well, traditionally, when we've had a presidential election, there is uncertainty about new policies if there is a change in the president, and that has caused the IPO pipeline to slow down. Whenever there is uncertainty in the markets, you see that sort of reaction. We have had this year one of the best years in our history in terms of IPOs. That's also been part of the story. There has been the low interest rate environment. We expect that will continue. And we expect that there will not be radical, if you will, changes in public policy, because it looks like we will have a divided government. And so change will come incrementally. And I think that makes the markets more predictable. And with more predictable markets and low interest rates, I think you'll continue to have a healthy demand and pipeline for IPOs.
And I know this might be a little bit cheeky, but I wanted to ask you about the Airbnb IPO as well, because this is going to be huge for NASDAQ. And congratulations on that win, by the way. Look, we heard reports suggesting that documents were being filed as early or perhaps as soon as this week. What type of conversations are you having with Airbnb about what this is going to look like when this company goes public?
You know, I don't want to get ahead of them. I don't want to be a front runner. All I can tell you is it is a great example of the ingenuity that we find in the companies who list on NASDAQ. We're happy that they make a home with us, will make a home with us, and we are preparing intensely for it. But I think I'll leave it at that.
You think the market fundamentals are right now for an Airbnb IPO?
Well, I think you continue to see a healthy market and IPOs that continue. We expect that will slow down as we approach the holiday season, as it traditionally does. But right now, with the resolution of the uncertainty around the election, with hope on the horizon around the pandemic, it does look like conditions are quite positive.
I also wanted to ask you about ESG as well. This is something that we continually hear from our viewers, from the companies that we speak to as well on CNBC, about how critically important ESG is now when it comes to investing trends and opportunities. How critical are these issues for NASDAQ? And have you also seen perhaps a shift, if you will, in investor appetite for this type of investment activity?
I think you'd have to say that the ESG phenomenon has been one of the biggest developments in the financial markets in the last few years. This has been a bottoms-up phenomenon. This is being driven by investors. It's being driven by employees. It's being driven by customers. Employees want to work at companies who have values that are transparent in this area and that they can share. Customers want to buy products from companies that share these values. NASDAQ has tried to do its part in how it manages its company, how it populates its board, signing the parity pledge, being part of the business roundtable, description of the new public company values and the responsibilities we have to all our stakeholders. So this is something that is not going away. And I think in the end, it does. One CEO who I respect a lot said in countries where we do the best with ESG, we also sell the most products. And so there is an alignment, I think, between the corporate long-term economic interests and shareholder interest with ESG values in many cases.
And is this something that NASDAQ intends on prioritizing in the future as well, particularly when you attempt to attract new listings, when you look at your IPO pipeline? How much of within the fabric is this ESG narrative going to be woven?
Well, we have to not just talk about this, but we have to walk the walk, if you will. And our management is very, and board very aware of that. And we are intent on producing the results that our shareholders expect, in customers and stakeholders expect, in the work we do on a daily basis. But it's hard work, and that's true for every company. And it's more than just talk. So we are about working on this right now.
Ed, I also wanted to ask you about our region as well, because NASDAQ has tentacles that run deep in this part of the world. You're a technology partner to a number of key exchanges. One of the issues that we face out here, though, is that while we have deep pools of private capital, we're a very wealthy part of the world, liquidity on the public exchanges is still a major challenge. If you look at the stock exchange in the UAE, for example, all three of them we have an issue here with regards to retail participation. So how do you think the liquidity challenge in Middle East markets can be addressed, and how do you view it?
Well, I think it's important that you look at it as an ecosystem. It is not one set of rules. It is not action in one area. It is it's building an entire ecosystem, promoting entrepreneurship in your educational institutions and in your culture, creating rules that are conducive to early stage companies wanting to go public, finding market makers who are willing to put capital at risk so that you can have continuous markets. These are things that I know your regulators and public officials are looking at: how to promote small early stage public companies, how to attract liquidity. You have had an increase in liquidity this year, like much of the world, because of the action of central banks. You do have a number of large companies who trade on your markets, but you have to make these markets attractive. You have to create an entire ecosystem. It's more than just adopting rules. And I think your leaders understand that. And I think they're on the path to do that. And there are a lot of very attractive things about the UAE, about its location, its culture, its hospitality, its transportation assets. All those things can be brought to bear. And I think you're on the road to do that.
So what more do you think can be done in this country and others around the region to enhance the maturity of their capital markets?
Well, I think it comes back to what, as I was saying, you have to build the rules on your market. You have to promote a culture of entrepreneurialism and innovation. You have to make the public markets as attractive as the private markets are. And you have to create a roadmap for companies to start out as public companies and small and then slowly grow. It's what we have done in the United States with lighter regulation on smaller companies. And as they get larger, you layer on the additional requirements, but recognizing with simpler business models, there's not the same need for heavy regulation that you have on large companies. But it takes hard work, and it takes a focus on a multifaceted ecosystem.
Edward, unfortunately, we're out of time. We'll have to leave it there. But look, I've really enjoyed our conversation today, and I'm looking forward to speaking with you again very soon. That's Edward Knight there, the Vice Chairman of the NASDAQ. Thank you.
It's been my pleasure. Thank you.